Hello, this is Compound Interest Stock Guide. Today in this video, we're going to be talking about some profitable companies in cannabis and how they're kind of bucking the trend. And I'm also going to do operational updates on Zenabis. And I'm going to also do the announcements from Aurora Cannabis. And just kind of have a divergence in just the difference in how I think that Zenabis is kind of maybe bucking the trend as far as the negative things in the cannabis space versus Aurora kind of like doing some very bad things, and stock could go down a lot in my opinion. So hey, I'm not here to make everybody happy. I know there's a lot of effing Aurora Cannabis investors, but hey, I'm not invested in Aurora Cannabis, and I've seen the Goodwills for a long time, and everybody on YouTube that's been like going crazy about Aurora Cannabis forever, that was like the last thing they ever saw was like the Goodwill write downs. Like, so Terry Booth could buy the stock at 360 or whatever, but when you got that Goodwill, it had to be written down, so it's going to be written down. So I'm going to get down to that further. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell based on anything I talk about. Buy or sell after you did your own research, due diligence, and you like the investments you're pursuing. Oh yeah, so if you haven't already, I'd really appreciate it if you gave that thumbs up, that big thumbs up. Appreciate it. Leave a comment down below. I reply to people all the time, and having a good feed of interesting conversations with my viewers and subscribers. So it's always a cool thing to talk to people. And so let's get started. All right, so we're gonna drop it like it's hot. When the pimps get mad at me, we're gonna drop it like it's hot. All right, so yeah, we're just looking at this is the best sellers for the flower, right? So this is just a preview on Aurora Cannabis, how their sales are down because they had to bring back packages. Like, packages got sent back to them, so they had to give money back to the government, or not get that money to begin with, or something like that. So they're losing like $10 to $12 million on some product that didn't sell. So I just think that it's interesting. I mean, I think that THC, Biomed, Aphria is right here, Aphria, and I've noticed Zenabis as being like Zenabis right here. There, this is the, and then sometimes they have their Durga Mata that's usually like in the top 4 or 5 sales. So I think they're selling a lot of flower, and I've done the comparisons based on, I think it was like November. And BC actually is about 15% of the whole Canadian sales. So it was like, I think it was like 135 million in November, and they did 19 million. So it was in the summer, they were doing about 5 million, and now they're doing 19 million. So they're going to be, like, based on that stat, they're going to be 200 million plus for 2020. But it could be a lot bigger. More stores. I know Penticton just had a BC cannabis store that just opened up recently. So yeah, there's some interesting things that are happening in the cannabis market. But so the Sensi Star, and Aurora's still got lots of market share in here, but I know that's getting chewed away by other competitors. When THC Biomed's got $7 grams, and everything from Aurora is like $9, $10 to feed all the money to their execs who want to get paid tons and tons of money and options and crap. So yeah, I mean, that's why there's shit's more expensive. Same with Tweed, right? Like $9. Like, it shouldn't be $9 in my opinion. I mean, I don't know. Maybe it's good weed. I don't know. I haven't really tried cannabis from I like Tilray's product for the flower. It can be pretty good. It's and Broken Coast. So Aphria, Cron, and some of the stuff, like, okay, this Ultra Sour from Zenabis sell very good, and there's Citrique, and now they got the re-up products, So listen, they are taking market share. Shiskaberry, and I mean, I know they're very disliked, and there's a lot of corruption on corporate level with the convertible debenture holders. And yeah, so it's not good. They do have a fight on their hands, and they do have to pull up some good numbers and get that kind of debt sorted out. I think it's what it is they have like 50 million of the debt that's due June. So I mean, what's it gonna be like? It's gonna convert to shares or something, right? So it's in their best interest to bring the share price up to maybe like 50 to $1 by June. I mean, I don't know where it's going to be, but I'm saying like that's in their best interest, because if they can convert all those shares, then it's only like 100 million shares of dilution. So if they can do that, I mean, that's not so bad for the company. But yeah, they do have some things they're going to be reporting sometime in February, as well as Aurora, and it'll be an interesting comparison, because I mean, they get thrown more dirt at them than nobody in the industry gets as much dirt thrown at them as Zenabis, but hey, that's life sometimes. Yeah, so anyways, that's what's up in the BC Cannabis store. You got the vapes. Zenabis doesn't have vapes yet in the stores, as well as edibles. No edibles in the store. So that's what Aurora's doing very good on. I'll give them props for them. Like, I'm the person you can dislike me for talking shit about Aurora or whatever, but I'm the person that'll give them credit when credit's due. But I don't kiss their ass. I don't kiss any, when I work for companies, I don't kiss any like on my management ass. That's just not my style. I'll be good with them. I'll be respectful and all that stuff. But that's just not my persona. So yeah, that's what's up. And VALENS is bucking the trend. I really should have been buying these shares. I think it got down to like 320. I had money in my TFSA, so I should have really, but my mind hasn't been really right. I've been struggling with my brother, but hey, that's life. So I haven't been on my game plan, but I killed it as far as the Tesla put this week. So did good on that, and put that money, put it into my checking account and stuff, right? So I'm not throwing it back into the market, because I think it's smart to kind of just chill on your money, right? Don't just put it back into your account and be like, oh yeah, I gotta buy some stock because I got cash in here. Yeah, I'm a baller. No, I think it's a good, intelligent thinking to just kind of just chill, and then when a great opportunity arises, then to kind of be like, all right, I'm gonna pull some money out of my checking account or my line of credit or whatever, and I'm gonna buy some stock that's at a very good discount, and you think you're gonna make a lot of money. Again, there's so many risks in the market. Cannabis market's so fragmented, but I like that there's some type of divergence going on, right? Because there needs to be a separation between the companies that are burning tons of cash and the companies that are actually making profits, because the companies that are making profits should be worth a lot more money, So that's my feeling on things, and I just think it should be happening in 2020, because when companies got a lot of debt overhang and whatever, and they're not profitable, it just they can spiral out of control. They can turn from like 3.30 all the way down to 25 cents or some shit like that, or even with Zenabis, right? Like, people who are buying at $6-7, I feel bad for them, but I mean, you have to know, like, if you bought a lot of shares at that price, I mean, you're chasing. So I mean, even at the 1 to 2 zone in Zenabis, if you're buying like a shit ton of stock, you just can't do that in these markets, because you have to be more razor sharp and just chill. You accumulate slowly. When there's a good opportunity, then you accumulate more. If that's what you want to do, if you want to accumulate a lot of shares, you don't just buy a ton of shares right at one moment. that's not smart investing. I don't care who you think you are, or like whatever in the world. Like if you think that's a smart decision, hey, kudos to you. But you got to scale in, scale out, because you just don't know necessarily where the stock will go. I mean, so say I had, like, I don't know, let's just say I'm a millionaire, right? Like I got $5 million, right? And I'm looking at that Tesla put that I made 50% gains in less than a day on, and I'm just looking at it, and I say to myself, yeah, I'm a baller. I'm just gonna throw $1 million on this, right? Well, what if the trade goes wrong? I just threw $1 million into the ring, and I could have been wrong. So when you do it in smaller increments, you have a lot more risk. You reduce your risk. So yeah. Anyways, we're gonna follow through on this, but I think it's very important to follow companies that are profitable, and Valens should be, they should be throwing a freaking punch in fucking in Aurora Cannabis, in Tilray, in Canopy Growth. Tons of companies that are burning bunches of cash because they didn't realize that you cannot run a business making $50 million in revenue and burn $80 million in SG&A a quarter. That's fucking redunculous. So yeah, that's just what's up. I mean, I got to get through this video. There's a lot to cover, but I just have to rant about this stuff, and it's real. So I like to see the follow through. I'd love to see it to run up above 4. I got a decent enough share position in Valens that I don't need to chase it. I mean, if I like it in the 330s or some shit like that, like, it's a really good value. I mean, if I didn't have a big position, I'd be buying today at 370. But as far as my position, I just want to keep my average as low as can be. So yeah, I mean, I can see it go to 4 or 5. We're gonna show GRWG went to $6, and I've been saying, I'm like, yeah, because they're a profitable company and they have a very tight float, like 30 million shares, and now they're at $6. They're on the NASDAQ. They were quiet when they went to the NASDAQ, but now they're just creeping up. So who knows? Who knows if they're gonna go to $10? I wish I could have got contracts for options, but they're not available. They may be available now, but maybe that is the reason why the stock's going up, because the market makers and the big money are kind of fucking with GRWG. But I don't know for sure. I haven't checked if there's an option, so I don't know. I'm just speculating, but it could be other reasons. I know, like, I think they're valued pretty good. They're about like 240 million. So they did about their last few quarters, they're like average about 1 to 1.2 million in net income a quarter. So that's about like 4 to 5 million in net income a year. So based on their market cap, they're running at about like a 50 to 60 PE. So hell, that's better than what fucking Tesla's doing. And like Tesla did eight, like, based on their last quarter, for a full year, their PE ratio is around like 840 or something like that. And when the share price went to 965, that's over 115 PE ratio, right? So I mean, companies can go very high PE ratio. I mean, companies can have negative EPS and go tons high. Like, just look at freaking Aurora Cannabis when they were worth like $15-16 billion in the last like couple of years, when it went up so high, because people think that Aurora Cannabis is unstoppable. Well, listen, they're not unstoppable. They're not. No company's unstoppable. And if you don't balance your budget and you spend and you buy everything within earshot, it's eventually going to come back to haunt you. So yeah, that's whether you're investing in the stock market, or you're investing into real estate, or you're investing in a business. You just can't buy everything. It's about a survival. it's a survival. It's a long-term plan. It's like, oh well, can you last long term? Can you last long term? Can you last a year, or can you last 5 years, or can you last 15 years, right? That's what companies have to focus their energy on, looking past just like the quarter, 3 months. They have to look a year in advance, and they have to balance their budget and be financial disciplined in the marketplace to make their money. So yeah, let's get to this. I'm sorry I've been going off about this, but I mean, it's very important content if you're a new investor to just kind of soak in this knowledge. So yeah, GRWG up big. I was looking at it at 470 last week, and I was like, ooh, I'd like to see it go down to like $4 or like, it didn't hit. So hey, that's okay. You can't hit them all, right? You can't hit them all, but GRWG, I really do like that company. I believe they're like 2% or 4% of my Canada Berkshire Hathaway portfolio that I made. Like, it's right in front of your eyes. That's the funny thing, right? Like, all the information that I've done over the years, like, barely anybody sees it, but it's like really like the stuff I've been putting out in the last 4 to 5 months is fucking gold, because I don't mince words, right? The thing that, like, it's, you gotta focus on just talking about the best companies. You can't talk about other companies that are trash and all that, because it distorts your mind. You gotta just focus on the biggest and the most profitable companies. And then, I mean, yeah, I don't do it all, because like, I think about safe. I own some safe, right? I'm risky. I'm a young person and all that. But at the same time, I may pull out of this position because it went to 10 cents and now it's just chilling around 6.5. Is it going to go down to 3 cents? Is it going to go down to 4 cents? I don't want to lose half my money. Fuck that shit. So, yeah, I got to make decisions in the market and move it into smarter investments. The companies that are liquid. So Labs is kind of chilling around 250 tilt, chilling. This is my profitable or close to profitable watch list, right? This is the best. It's Tilt, Planet 13, True Leave, Abercrombie and Finch, IPR. This is Lithium one. I don't know why it's in there, but it's in there regardless. And maybe because it's just I want to look at it when I'm looking at my cannabis, because it's like I'm not going to look at all my watch lists all the time. So I do weird things like that. I mean, if I had like a secretary to do all my work, like it would take a long time for them to like figure out how to do all this stuff, because I do shit very complex. Village Farms, and yeah, so there we go. Okay, so let's get down. How many minutes are we in here? 18 minutes. Holy moly. So yeah, so let's get down to Zenabis now. So, alright, so Zenabis on September, this is their forecast for kilograms grown, and they're forecasting 35.76 in January, less than December. Their December was less than their actual forecast, but, out of it, the look is the fact that they're growing more and more every month. So, I mean, in October was a big movement from September, right? From 2,089 to 3,586. And then they just went a little bit down in November to 32. And then now they're up to almost 4,000 kilograms a month. I mean, that's really big, because it was in like July where I was talking, and I was just going around outdoors and walking around in circles, and mosquitoes were eating me alive, and I was just just going off about how many kilograms these companies are growing right now, right? And it was like, oh well, Aurora's growing like 14,000 kilograms, or like Canada Beach is growing like 15,000 kilograms or something, and then Organigram's growing like 8,000 kilograms or 6,000, or Hexo's growing like 9,000, right? And now that Zenabis is growing up to over like 10,000. Based on this, it's like, oh well, 3,300 plus 3,841 is 7,000 kilograms. So you add, like, they only need to do 3,000 kilograms and they'll be over that for the, the next 3 months. But I mean, that's the last quarter. Yeah, I guess they already did it for this quarter, 33, because 33 times 3 is 10,000. So yeah, they're closer to like about 11,000 kilograms that they grew from October to December. So I mean, hell, that's bigger than when Aurora Cannabis was worth like $16 billion, and Zenabis is worth like 45 million. So hey, I mean, I don't know. People can lie, but numbers don't lie. So hey, I'm not saying they're perfect company or anything like that. I know this, but I'm just saying though, like, there is a substantial argument for saying that Zenabis is extremely undervalued when you look at the fact that Aurora Cannabis was worth 16 billion once, and yeah, I mean, and then you're gonna show, like, when the numbers come up. I mean, I didn't even know that was gonna be like 50 to 54 million and stuff this quarter. Like, that's crap. Like, that's trash, really. So I didn't know that at all, and I was thinking that they were more likely gonna do 80 million. I mean, that threw me for a surprise, and I'm like really on the ball about this stuff. So I don't think a lot of people knew what these numbers were going to be so bad. I knew last quarter's numbers were bad. They were 75 or something. I'm thinking that it's companies like Village Farms and Zenabis and even like Afria that are really crushing their market share across Canada, because Aurora Cannabis had, I think, more market share like a few quarters ago than they do now, because these other companies, I think even companies like Sundial with their Top Leaf brand and all that stuff. So yeah, they have their hands, they got pressure on them, and they bought Whistler Cannabis. And I mean, nobody's buying Whistler Cannabis because the cannabis is way too expensive. So I mean, maybe they're making like $1 million a quarter off of Whistler Cannabis, but they paid $175 million for. So I mean, what are you gonna get? $4 million in revenue for $175 million asset? I mean, I don't know. That's not paying for what you paid for it. I mean, sure, you're knocking off competition, but you're not really getting anything in return. Like, I mean, Whistler Cannabis is a great company, and I'm sure it'll pay off in the long term. But right now, I mean, it's just a kick in the pants, the amount of money they're getting from Whistler Cannabis. Because I know this. I mean, I see it on the OCS. It's like 0.1% of the cannabis gets sold. And then you got companies such as Village Farms that are getting 15% on the OCS. So, yeah, you do the math. Zenabis Langley Part 1 and Part 2 are licensed and operational. So, what they're saying is these are, okay, so what that is, about 48,000 kilograms of, kilograms of production that is licensed. But they're not growing that much at this current time because they're in ramp up phase, and they're not the smartest like growers, I guess, like in this greenhouse. Like, they should have had more intelligent people to set it up better. I'm not impressed with their Langley operation so far, but hey, that just gives more room for them to tweak it and to make big improvements in the market. So yeah, like, really the company, like the facility that's really holding them together is the Atholville. Without Atholville, like, this company, I wouldn't be invested in them, because they're out of Atholville is like, I don't know, they're doing about like 30,000 to 35,000 or something, like, probably, like, that's the run rate right now, what they're growing at in just Atholville. So that's pretty good. And I don't want to be in a company that's only growing 1,000 kilograms, because are you going to even be able to sell 1,000 kilograms? Because there's so much competition when you got all these strains. Like, it's a better to have like more kilograms in a sense, but you want to fly them off the shelf. So then you can bring in more products and restock the shelf. It's not about getting like $12-13 a gram, because those grams are gonna move. I mean, you gotta have some really sexy grams to really sell at $13 a gram. And yeah, so it's better to just, wholesale, sell tons and tons of weed. I'm not like I'm not talking like wholesale, but I'm talking about, when people are buying 7 grams or a half ounce or ounces, when it's at like under $140, $130 Canadian for an ounce, or around like $60 to $75 a half ounce. I mean, those are gonna move. Those are gonna move in the markets. And yeah, so license Zenabis analytical testing. They submitted it, and that's their delta and annual. I don't know if they is currently in the process of, so they're working on the license applications as well as their ZenCraft grow. So they have a grower that's like a legacy market grower, and yeah, so they're growing in there. Like eventually, and that's the weed that would be selling for like $12-13 a gram, right? But that's pretty good. 350 grams, yeah, it's a bit of money. What, 1,000, so 1,000 kilograms at $10 to $12 or whatever is like, it's like 10 million. So I mean, 350 is like, I don't know, you could probably get like maybe 2.5 million to 3 million, like when they sell it to the province or to medical patients or something like that. If it's really good weed, I guess people might pay that. Yeah. And then they want to do December. They haven't got this. This is the 14,800 kilograms. So that would put them over 100,000 kilogram capacity. Yeah, they can't grow it at a monthly rate yet. Takes time to kind of build into that, but it's the square footage that enables them to have that, to say like, oh well, that's the 100,000 kilogram production. So yeah, they're saying that they have the Zenabis Stellarton and Zenabis Link to be in steady state production, and Blazer and re-up brands. So and they're also working on trying to create more medical patients through compassionate pricing program. And they have good prices to begin with in the medical market. So, and they're doing promotions on Twitter and I think other places. I think on investing.com and some other places. So they're using money in that way to trying to create awareness to grow more medical patient count. Yeah, I mean, medical patient count is something that now with there's only so many recreational users, but there could be more medical patient users. And if they're going to be loyal, and that's what you kind of want. I mean, the medical patient count, if you have very loyal patients, that can add a lot of padded revenue to them. So I think that's important. Yeah, so I think that's pretty much covered the Zenabis update. It says in that time we've increased Atholville monthly harvest yields by 800%, which is an amazing achievement by the entire Zenabis team, said Kevin Koff, CEO. The total 29 Atholville harvest figure of nearly 20,000 kilograms, 20% was harvested just in December. Yeah, so they're saying about, close to about 4,000 kilograms. I mean, was harvested in December, so that's awesome. This shows us what steady state cultivation and production at Atholville can deliver. We are looking forward to achieving steady state production at Langley with more license amendments in progress. We also realized strong indicative demand from our provincial partners in December, resulting in our largest ever volume of units shipped in the month. We are excited about what 2020 will bring. Well, right on, Kevin Koff. You're not Andrew Greve, so he was before Andrew Greve, and now he's come back to be that CEO for the time being. I'm hoping they can get an actual CPG CEO and try to take the team to a higher level, but we will see. That's pretty much the Zenabis update. How many minutes is it? Yeah, about 30 minutes in. Okay, so Aurora Cannabis. Now let's do the Aurora Cannabis for all the crazy Aurora Cannabis followers. They can't get enough Aurora Cannabis. I'm just gonna be non-biased. I don't have a position in Aurora Cannabis. I'm just looking from the sidelines, but I have my input. CEO Terry Booth announces retirement and succession plan and expansion of the board of directors. Executive Chairman Michael Singer has been appointed interim CEO effective immediately. Search for a permanent successor underway. Interesting thesis. 2 new independent directors to join the board for a total of 10 direct, including 7 independents. Announcing comprehensive transformation plan to significantly reduce the company's expense base, rationalize capital expenditures, and better align its balance sheet with current market conditions. Ooh. So, I gotta ask the question, was Aurora short-sighted in realizing that maybe the market wasn't gonna move as fast as possible? Maybe. Shots fired. Secures credit facility amendments that remove EBITDA ratio covenants and provide additional financial flexibility as Aurora executes transformation plan. Company provides select unaudited preliminary fiscal Q2 financial results and updated outlook. Aurora to host conference call at 5 p.m. Eastern time. Interesting. So, all right. So, CEO succession. I'm just going to summarize parts that I see. We're welcoming new independent members, Lance Friedman and Michael Detlefsen, who bring a wealth of strategic and hands-on consumer products industry experience to the organization. Interesting. Singer, I heard somewhere else that there was some guy from Mondelez, but that's probably just a rumor, just some hype creation. These are necessary steps that reflect a fundamental change in how we operate the business. On behalf of the board of directors, I want to thank Terry for his leadership over the years. Terry is an invaluable resource with deep industry knowledge that we can leverage strategically. I look forward to having him continue on as a senior strategic advisor to our board of directors. Interesting. So SG&A. SG&A is the thing that I focus on a lot because I think it's very, 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 did I say very, very damn important. Because if you got a company that is doing $60 million in revenues and their SG&A is $90 million, how the F are you going to be profitable? How the F? I mean, you're not. Because there's profit margins, right? You got your profit margin, say you got a 50% profit margin on 90 million, you're going to get 45 million in revenues. Now you got to minus your SG&A of whatever it is, 80 or 100 million. Now you're minus 35 or minus 55 million. That's crap. So I respect that they're doing it now, but it's kind of a little late, Too many people have got paid too much money over the time, and they weren't intelligent with their capex, and that's why Aurora's getting beast. They're getting beat, hard, and they deserve to get beat hard for a long time because they've held $3 billion in goodwill forever. So. And we're going to work on eliminating close to 500 full-time equivalent staff across the company, including approximately 25% of corporate positions. Wow, that's fucking crazy. It's sad for people to lose their jobs. I don't wish that upon anybody. But, they aren't going to be profitable if they have all those employees and they don't have that revenue to back it. So, announced an intention to reduce capital expenditure for the second half to bring capital expenditures below 100 million in total. 100 million in total. Below 100 for the second half. So I don't know. That still doesn't seem that bullish, to be honest. Over the past, unless they're doing in the back end of the year, say 300 million or some crap, really big numbers, 150 million a quarter, which I don't know. I honestly don't know. I look at it as, okay, I think the market for 2020 is a $2 billion industry. So based on the projections, if Aurora does about, 20%, they're going to get $400 million. If they do 25%, they're going to get, 500 million. So I don't know. I haven't done the math. I think I think they will at the end of the year get closer to the profitability by the looks of this, and I've already done a lot of research about this, so there's substantiation to substantiate that there could be profitable at the end of 2020, but not anytime real soon, I don't think. Complete removal of all EBITDA ratio originally sent to commence the period ending September 30th. Adjustment of the total funded debt to equity covenant to 0.2 to 1 commencing in fiscal 30. Total debt total debt to equity. Adjustment of the total funded debt to equity covenant. So it means like for every 200 million of debt, then they need to have $1 billion in shareholder equity. I think that's what it means. And it used to be 250 million in debt, then they could have $1 billion in equity. That's my understanding. I don't know everything. So reduction of the total facility size available 41.5 million. Reduction of the total facility size available by 140. Oh, so they have less than 141 million in liquidity. Wow, that's not very good. I didn't read that before. Wow, that's a kick to freaking to Aurora's liquidity. They have a new minimum liquidity covenant of 35 million. So not sure what that means, but Glenn, CFO, stated, "We are pleased to have reached with our syndicate of banks to provide Aurora with additional financial flexibility aligned with our focus on achieving near-term profitability and providing the company with options to finance the facility at maturity." So there's good things about this, and then there's bad things. I mean, I think that it's the complete removal of all the EBITDA ratio covenants. So they don't need to meet the EBITDA covenants, but from the reduction of the facility size, and that doesn't seem that great, as well as the debt to equity lowered doesn't seem good either. So that's just my opinion. Aurora churn as such, it expects to report asset impairment charges on certain intangible and property, plant, and equipment in the range of 190 million to 225 million, and write-downs of goodwill in the range of 740 to 775 million. So that could realistically, like 190 plus 740 is 930 million, but then this could be, so it's anywhere from 930 million to 1 billion. Whoa. Ooh, scary. Oh yeah, I said stuff. You gotta follow me on Twitter if you want the quickest up to date. I don't go live, or I don't post videos right at the moment, because I value my viewers and subscribers, that I just want to post like when I'm sure that I'm gonna know the most amount of information to share, because I want to be on point with my listeners, and so that's not important to be first or anything like that. I just want to bring content that's like super damn legitimate, that people know it's like, okay, this guy knows what the F he's talking about. So that's like, but if you follow me on Twitter, I will post there when things happen, and I'll like say my piece, but it'll be in like 200 words or less, right? Because that's what Twitter is. And so if you want to catch me updates and stuff like that, follow me on Twitter at compoundstock13. So he believes that the long-term opportunity for Aurora remains very compelling despite a slower than anticipated rate of industry growth in the near term. We also believe our approach to rationalizing the business and conservatively improving our balance sheet positions Aurora in a more stable position for sustainable growth moving forward. Well, yeah, I think so. I think that's good for them. So Aurora announced that its consolidated cash position was 156 million, excluding 45 million of restricted cash as at December 31st. This includes gross proceeds raised under its US 400 million at the market financing program of approximately 245 million or approximately 325 million Canadian to date in fiscal 2020. So they have remaining capacity under its current at the money program of approximately 200 million. So they can still get 200 million more dollars in cash so that's good for them but I mean, I don't know. You don't really want to use all that money that's on your credit facility. So that's my opinion. With the cost reduction and business transformation initiative, the company expects that utilization of the 8 at-the-money capacity will be sufficient to fund operations and remaining required capital expenditures to the points where positive EBITDA and free cash flow are achieved. Well, yeah, FCF, free cash flow, are the number one things to focus on 2020. Free cash flow. Because if you're not doing that, you're just burning money. And I don't know about you, but I personally don't like to burn money in my wallet. So it's the same as a business. You don't want to burn all that money out. So if you got $1 billion in cash and then it turns into 900 million or 800 million and then 700 million, it's not a nice look. So now they're talking about their financials. So they're saying 62 to 6 million net of excise taxes, but the negative is they have 12 million of products sold previous quarters are that were sent back to them. So for returns, price reductions, and future provisions. Okay, so it's not just returns, it's price reductions and future provisions. So therefore, they're giving them 50 to 54 million. As well as the German supply interruptions because they messed up with the licensing. For the second quarter, Aurora expects to report modest quarter-over-quarter growth in consumer cannabis revenues prior to applying these offsetting return and price reduction allowances. Cash cost to produce per gram of dried is expected to remain below $1. Sales and marketing expenses are expected to be between 28 and 32 million, and general and administration are expected to be between 70 to 75 million. Oh, that sucks crap. That's 98 million to 107 million on $55 million in revenue. Oh my god, that's crap. I mean, even if you did 80% profit margins on that's like what, 45 million. I mean, you're still gonna do a $60 million net loss. Then you're adding the write down of anywhere from like $1 billion. I mean, they're seriously gonna do $1 billion in net losses by the sounds of this with the write down. It's gonna be tragic for Aurora Cannabis. It's seriously gonna be so tragic. I feel bad for the Aurora Cannabis shareholders. I said sell. You know, fuck. Last night I said sell, you know, because this is terrible. $1 billion in write downs. I mean, hell, I should have sold when I had Tilt Holdings after the 500 million write down. Like, that was a mistake on my part. But I mean, for this, I don't know. It's just trash. But hey, maybe they'll push it up in the markets. I don't know. Maybe they got some like the banks that are gonna pump the shit out of Aurora. I don't know. I honestly don't know. So, anyways, this is webcast today at 5 p.m. Interesting. I didn't listen to this. That's cool. So, yeah, I may link it, or maybe I'll just put it on my Twitter page. You guys can follow me at Compound Stock 13, and I'll put it there. That's the Aurora Cannabis. You just go through my Twitter feed and you can find it. So yeah, that's really what's up. It's been a very long video. I didn't want to be on camera. Well, feeling it today to be on camera, but I don't mind making a video. And yeah, that's what's up. Aurora Cannabis, kind of updates in the market, showing that they are in a bad spot because they're losing market share with returns, right? Because things aren't selling in their flower market, or they have to lower their prices and get. So, yeah, it's not looking too sexy for Aurora Cannabis at the moment. Things can change for sure, but my opinion is to stay away until you see Do you see a bottom if you have to get into Aurora Cannabis? And yeah, be careful out there. I don't know. Aurora Cannabis, I mean, they can use the at the money thing to buy to dilute more. So you say you got 1.2 billion in shares, before you know it, they can do another 100 million in shares, and then dilute to the then they're close to 1.5 billion in shares, and they're not making any revenue. So another problem with Aurora Cannabis, why the stock shouldn't be $10, is because even if they do $10 million in net income, okay, which will be great, it'll be great, but at $10 million in revenue, then when you got like 1.3 billion in shares, that EPS is very shit. You're like at like a penny or like less than a penny, for the EPS per quarter and for the year. So it's very low. Whereas if the company has, say, like 50 million shares, or they have 100 million shares, and they do 10 million in or 100 million in net income, well, their EPS will be 10 cents or $1, right? So that more substantiates the company that they should be worth, like, say, like 50 or 100 PE. I mean, S&P 500 companies should be somewhere around like 10 to 20, and even if it's a lower PE ratio, that doesn't mean you should necessarily buy it, because the debt or maybe the industry is going to trash. So there's other things than just a PE ratio, but for just general terms, that a 10 to 20 PE ratio is generally pretty acceptable in the S&P 500. But for growing companies in the cannabis sector or other companies that are in very high growth, a 50 to 100 PE ratio I think is substantiated. So when you're looking at a company such as VALENS that's set to do probably $10 million in net income, not revenue, 27 million in revenue this quarter coming up, and I'm thinking about 10 to 13 million in net income on about 122 million shares. If you times that by 4 for the year, like they're at about a 44-cent EPS. Now you times that by like 50, you're looking at a $20 share price. So hey, I did the math for you guys, and you guys got to do your own research and due diligence. And yeah, I mean, you may disagree with me, that's fine. Leave a comment down below. We can share it. We can talk about this. And disagree. It's all good. I'm open to listen to other people's point of views. And if you haven't hit the like, ensure you hit the like. I really do appreciate that. It pushes me to make more videos. And anyways, keep compounding your info. Listen to my lingo. And shaka cup. Peace. I'm out. You guys take care. Have fun on the weekend. And don't get yourself into trouble. And enjoy your life. Bye.